As we all know around here, when you go woke, you go broke. Today's hearing will help us better understand what Congress can do to ensure that activist stakeholders will not encourage woke corporate activism, as we have seen recently with Anheuser-Busch, Disney, and even Nike.
Although every other word coming out of their mouths these days is woke, our friends have proven famously unable to define what they mean by woke. So I did a little research, and I want to help with the etymology of the word. Woke comes from the Indo-European root weg, which means to be strong, lively, alert. That root grew into woke, awake, wakefulness, but it also grew into the closely related word vigilance. The opposite of a vigilant, woke investment strategy is a negligent and inattentive investment strategy. Or to put it more simply, when it comes to climate change, if you don't have a woke capitalism, you're going to have a broke capitalism. Thank you, Mr. Chairman, for launching this important discussion and for holding a hearing on responsible investment strategies that take into account all material considerations and risks when planning for Americans' retirement and savings. And you know, that's precisely what insurance companies, asset managers, builders, energy suppliers, transportation companies, farm businesses, auto manufacturers, landscapers, investment firms, and countless others are doing right now by incorporating into their business plans all relevant factors, including the calamitous consequences of climate change, the devastating hurricanes, the dangerous droughts, the sea level rise and coastal erosion, the stormwater flooding, the spread of disease, and other costly natural disasters produced by destabilization of the Earth's climate. But the same big oil and big gas companies that suppressed for decades their scientific understanding of the dynamics of climate change now want to deploy governmental power to literally block the ability of other private companies and asset managers to fulfill their fiduciary duties by planning around all relevant risks and costs, including the risks of climate change, which has already cost businesses, government, pensioners, and consumers billions and billions of dollars. Amazingly, the fossil fuel industry wants Big Brother now to march in and stop the free market from responding to the climate crisis that the carbon kings created. It's clear that honest American businesses are not buying the propaganda of climate denialism. They have a duty of loyalty and care to their shareholders, and they're focused on the actual bottom line, and that always means, as we will hear from the minority witness today, facing reality, facing the real risks and costs that businesses encounter, not swallowing a bunch of mythology and lies. America's most successful investors and asset managers have voluntarily and freely embraced responsible investment principles as a fulfillment of their legal fiduciary duty to minimize risk, maximize returns, and prudently plan for long-term challenges like the ones associated with climate change. That is the freedom, and that's the decision that the fossil fuel industry and its supporters want to destroy. But responsible investing works, and we have the opportunity to explain it today. The proof is in the pudding. Over the last decade, Bloomberg's ESG index performed dramatically better than Standard & Poor's traditional fossil fuel-based index. Consider this remarkable contrast on the sign behind me. Now, the ESG index is obviously performing a lot better than the general stock index, but I would never say, Mr. Chairman, because of these stunning trend lines, which smart investors will certainly take note of, I would never say that the states or the federal government should force all investors or asset managers to steer all their investments into ESG stocks like wind or solar or conservation or whatever. I would never say that. If there are investors who want to continue to invest in just big gas and big coal and big oil, that is totally their prerogative and right to do so, and I would never interfere with that. But one can only regard with amazement the fact that the fossil fuel industry is using their massive wealth and power now to try to force investment funds, asset managers, unions, pension funds, and businesses to invest in the less successful carbon-dominated stocks. It makes sense to say in the free market that no one should be forced to do the demonstrably right thing with their money, but it is appalling to say that everyone should be forced to do the demonstrably wrong thing with their money. Let's let the free market operate. The new campaign against what Tocqueville called the enlightened self-interest of American business comes dressed as an attack on woke capitalism, the same epithet used by Governor DeSantis in his attack on the Disney Corporation, which has backfired so badly on him. Responsible investing principles, including ESGs, have been freely chosen by America's companies and employed by asset managers and pension fund managers for decades. Right-wing attacks on these principles, fueled by dark money, corporate special interests, and flawed legal arguments, threaten now the savings and retirement of Americans by forcing asset managers to ignore material risks and considerations and violate their fiduciary duties. And we're hearing this from all over America. At the end of the day, the only way for asset managers to meet their fiduciary duties is to allow them the freedom to invest, focusing on what will provide the greatest return for their beneficiaries that they have a fiduciary duty to. Even if you favor, as a personal financial strategy, exclusive investment in oil and coal, you should not be interfering with the rights of others to make other decisions, especially when their decisions have been yielding significantly higher returns. Thank you, Mr. Chairman. I yield back.